and help them do it. Or it's an aspiring developer, it's somebody that says, hey, I want to get into the real estate game. I've invested a little bit. I'm, kind of that, like, I know enough to be dangerous, but I don't want to go in because I don't know enough to protect myself. And, we've helped a couple people in that situation where they said, I want to be you. I want to launch my own development company and I want to do this. I'm like, well, then great, let's go. We have no pride of authorship. We want to teach people the process, and we want to teach people I always say, I want to teach you how to walk with us on this one so we can run on the next one. And and you can go forth and do more without us or with us. We invest in some of our clients that have moved on projects as well. And it really is a 50-50 mix. And really it's helping people understand that there's so much value that they can create and how to leverage it possibly, and also utilize all the incentives that they have at their disposal that a lot of times people have no clue even exist.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CREPN Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Katie Kim. Katie Kim is a visionary real estate developer and educator specializing in transforming overlooked urban spaces into thriving, community-enhancing developments. And in just a minute, we're going to speak with Katie about how to scale your real estate portfolio. But first, a quick reminder, if you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how attractive our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Katie Kim. Welcome to CREPN Radio.
Thank you. Thank you for having me.
I'm looking forward to our conversation. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Absolutely. So yeah, I grew up in the Midwest. I grew up as part of a construction real estate development family. So my afternoons were filled, or my Saturdays and Sundays, I should say, is going to soccer practice or volleyball, and then, going and hanging walls or shingling roofs or, pouring foundations. And so I grew up surrounded by the real estate business and construction, but never really learned like how the business works. And so like any kid, a typical kid, I should say, within a family business, you want to go away to college and never take over the family business and not move back home. And that was where I set my sights. And I actually got my degree in computer science and went to work for a consulting company where would go and look and implement technology 3 to 5 years to market, and found strategic profitable solutions. And I usually say that's as fast as I can tell people before I put them to sleep. And I love what I did, and being able to go into companies and find opportunities for growth and change and progress. And then I shifted to a startup. And then when the startup got bought out by a big Fortune 500 company, was saying, "Hey, what do I want my next career move to be?" Right? And my parents were like, "Well, you've been investing in real estate since you graduated college," which I had. I had bought my first condo in Chicago, and then I kept buying one a year. And I said, as long as you teach me the development side, like I feel like the development side's where the real money is. And so we negotiated a deal. I moved back home and I took over the family construction company. and running that, and then really found that I was missing something. I was missing some fulfillment, and really found alignment with um, creating a professional service division for the Kim Group for developer for fee. And that's really where we help people, aspiring developers and or business owners, really learn the development process and hold their hand from beginning to end, and figure out how to structure bringing in investors, economic incentives, how to do their deal, and really making real estate investments part of their portfolio and part of their wealth building from a family standpoint. And really the first project I did with a bakery where we got them, they were renting since 1861 for their business, and we got them into the first building that they owned in that time frame, really was fulfilling. And the way I saw it have that positive ripple effect for not only the business but for the family, and how we're setting it up for generations to come, kind of really fulfilled me. And I went all in into that developer for fee option, and told my parents that I'm not buying the construction company, and really launched the Kim Group full throttle with that. And then kind of got challenged a little bit again the last couple of years to how do we take what we do and share it with more. And that's where we have created the Katie Kim educational platform, where we teach developers through our course how to develop, and also in the community help guide them through that process. So they can really start to enhance and scale their real estate portfolio, and develop and build generational wealth.
Awesome. Well, that's quite the dynamic background. I mean, you like you grew up in it, didn't know what, I mean, like anything, like you said, as a kid, you don't necessarily want to go back to the family business kind of thing. You had enough, but when you understand it like you did, and to have the opportunity to come back to it, and then kind of even from there figure out your own path, that's pretty cool.
Mhm.
Um, so I'm curious, the story you tell about the bakery, that's pretty fascinating that they were renting since 1861. Did I hear you say? And that's
Yeah.
and they probably could have bought multiple buildings in that amount of time. Um, in when I was introducing you, there was a portion talking about some of the urban infill kind of thing.
Mhm.
Is that a particular strategy that you uh, focus on when working with your development clients?
Yeah, I think, a lot of people, I want to say they find, there's no easy word in development, right? But they find the easy way is to go into a plain field, a grass field, and put the infrastructure and do like a new ground up development. However, the more complex, and they are more complex projects, but the city and the government and the states usually incentivize developers to do urban infill more from a economic incentive standpoint. So when you look around your city at the areas like a downtown, a lot of downtowns have been, they're blighted now because people are moving to those easier um, developments where you can have all that parking space, have all the room you need, develop what you need for your business. And now we're having a lot of the areas of our city where the infrastructure is original to that area, right? So it's the infrastructure is more costly there, and we don't have businesses utilizing it and also helping, bring up that tax base for our municipalities to support it and maintain it. Now you're starting to see them, and you have been for years, really incentivize developers to come back to that downtown. So you're looking at, enterprise zone and business development districts, special service area, historic tax credits, opportunity zones. There's so many incentive programs that the cities put on the table for people to look and do projects there. However, we've also made them so complex that they don't understand it. And so that's really part of what we do in our course is look at all the options you have for that funding sense source, because the bakery, it went into they one of their goals is they wanted a building that represented their brand. Well, I said, so you want an 1861-year-old German structure building, right? And they're like, yes. I'm like, but we actually found one. It was an 1893, 95. The records, we go back and forth. It was the first building actually before the town was even incorporated, where it actually it was a bicycle factory. And so we, as you can imagine, an 1893, 95-year-old building, it had been used and abused over the years. It had the highest lead-based paint content that the state inspector in his 35 years had ever seen. Not something you want to be first in, but we looked at it and we said, this is it. This is what we want. The building had had like 5 fires. All the windows were boarded up or replaced with like double hung vinyl siding windows, which is definitely not historic. And we went to work on providing this stack where it was like a $5 million project where the bakery owners only put in $50,000. And we only had roughly about 1.8 million of bank debt. And we filled the rest of that gap with incentives, economic incentives that didn't put a debt structure onto the business nor to the investment. And we structured it in a way that our investors actually made 353% return in 4 years, mostly from the incentives and the tax credit structures. So, we want to look at those projects when we do urban infill of how do we make not only the construction, stabilize and efficient, but we want to look at how do we make it financially stable in terms of the investment opportunity and for the business and for the community around it and create that ripple effect. And so I think when you do urban infill with that mindset it's not just this property, it's we're creating a destination, we're creating an experience. You get an amazing ripple effect because from that project, that community received about $15 million of ripple effect development in 2 years after it. And we last calculations about 35 million within 4 years of construction completion from it. And it's providing that confidence, right? And that's what developers a lot of times need is they need the confidence to go into those areas. Investors need it to, invest in the areas, to expand their portfolio. And, with our community, that's what we're looking to do as well, is really help people evaluate those opportunities and create that confidence and the stability, building teams such as, yourself that can help you on the insurance side, that can help you provide those safety nets of structure and risk mitigation in going into those developments and investments to make them, be win-win-wins.
Yeah, no, that's a one and each story, but also then, like you said, talking about and teaching your customers about all the ways in team building and sorting through all the incentives and all that. I'm curious, do you find that the people you're working with, do they tend to be like an owner operator like the bakery, or do you find yourself working with investors that are looking to grow a portfolio?
We're really kind of 50-50. It really is either it's a business owner, usually it's a small to medium business owner that they either own their building, but they want to scale or their company's growing, they don't know how to do it, how to structure it properly. And also looking at succession planning. That's a lot of times when we go into those bigger family owned projects, we look at how do you set this up for the next generation? And or they've like the bakery rented forever, and they want to get a piece of the game, but they don't know how to leverage their business into making that happen. And we help them, beginning to end, or we plug and play with where they're at and help them do it. Or it's an aspiring developer, it's somebody that says, hey, I want to get into the real estate game. I've invested a little bit. I'm, kind of that, like, I know enough to be dangerous, but I don't want to go in because I don't know enough to protect myself. And, we've helped a couple people in that situation where they said, I want to be you. I want to launch my own development company and I want to do this. I'm like, well, then great, let's go. We have no pride of authorship. We want to teach people the process, and we want to teach people I always say, I want to teach you how to walk with us on this one so we can run on the next one. And, and you can go forth and do more without us or with us. We invest in some of our clients that have moved on projects as well. And, it really is a 50-50 mix. And really it's helping people understand that there's so much value that they can create and how to leverage it possibly, and also utilize all the incentives that they have at their disposal that a lot of times people have no clue even exist.
Yeah, no, I the numbers you cited on the bakery, $50,000 being their investment with, I think, would you say it was a $3 million project or
Five.
5 million and like $1 million debt, 1.5 million debt?
1.8, yeah,
1.8.
roughly 1.8.
I mean, those are numbers that work all day long. Uh,
Hmm.
I'm curious, is that typical of what you find as far as that, that level of incentives as far as available, or is it all kind of over the map?
I think on the level of incentives, it really depends on the community and how willing they are to come to the table. Like this community really, really wanted the bakery there and they knew it was going to be a catalyst for their downtown. I don't think they realized how much at the time, but they really wanted it. So they stepped to the table. And I will say the difference is in the community. If they believe in the project and they come to the table with those incentives, then yeah, all day long. Um, they put everything on the table. They gave, 1% additional sales tax. They gave their sales tax, their TIF, and I see a lot of communities that are poised for growth come to the table like that again for that initial catalyst project, and then usually the ones after it's less because they don't need to, they already start to have those incentives going. But because of us working with the village in this case on that project, we ended up doing, let's see, at least three more projects. We found they had a problem with the most communities have them is the vacant corner gas station in their downtown area that nobody wants to touch because it's a brownfield site. And we worked with them on obtaining that property with really no money out of the village's general obligation fund, and then redeveloping it with another client that we had. I was a small business owner. They wanted to expand their business and have an office in that village, and then have more investment like opportunities with other tenants leasing from them. So, and then we did a townhome and condo project as well to help with the housing gap that they had. So looking at like, going into those communities and solving a problem, that's what those communities are going to incentivize you the most for. Like, what are we missing, and looking at those areas, and really urban infill, a lot of times that's where they're missing, so they're going to create those programs to incentivize you in those areas.
Yeah. No, and I think to add to that here recently with the COVID, the work, the way people work anymore is not the same as it was pre-COVID. I know
Mm-hmm.
Portland, Oregon is a little challenge right now in the downtown space, or office space anyway, just with the high vacancies with people working remotely or employers having relocated to the burbs with a smaller footprint or just there's kind of a change that's going on. And it really the ripple effect, you talk about the positive ripple effect, the negative ripple effect is when the the office building goes dark, all those supporting businesses around that are no longer able to operate because there's no business. And
Mm-hmm.
it's kind of a real sad thing. And then for municipalities to recognize that and be willing to do something about it.
Mm-hmm.
I'm curious, do you have any kind of a cheat code or a a recommendation for your customers as far as how to find or recognize the communities and you know that have these incentives available?
Yeah, so couple parts of that. Like one, we have a real estate development checklist that I'll share the link with you if you want to put it with the episode as well. And that walks through like what to look for when you're starting a development deal, a couple of pitfalls to avoid. A lot of the communities, if you go to the economic development, and again, the could be the EDC office or any kind of economic development committee, council group within your community. Some of them call them different names. Um, but they usually have the list of opportunities. Now, forewarning, if you go there and say, hey, I'm looking for free money to do my project, they're going to say we don't have any. Okay, so you got to be able to ask the right questions, right? We want to engage in growing and investing in the community. Where are you incentivizing developers and people to locate, right? What's the best and highest return for economic incentives I'm going to get? The other thing too is if you're kind of a pro tip, what I look at is if you go to a GIS website, A lot of times people use it for like tax parcels and the C boundaries and stuff like that. You can also plug in, if the municipal has the data on there, like where those maps are. You can say like, show me where your enterprise zone is, show me when your business development district is, and it'll map out like in the city where they're at. And then you can start to go to work and kind of drill down from there. I'm sure you can use chat gpt even to say like, hey, where are the economic incentive zones and areas in my city or my county. And that's another thing, there's also like city, county, and state, so you gotta look at all three of them as to where you're going, or municipalities, or how you're doing it within your area. But those are three definite ways that you can really hunt down where they're at. And then it becomes, how do you use them, right? And that's where, one thing we do in our course is I have a lot of Katie thinking out loud videos where it's like, okay, community member threw this project at me. This is how I would think through it. These are the incentives. This is how we would layer it in. And we kind of talk through those, because if you don't know what you don't know, you don't know to ask, right? And so some of that is understanding how you can structure the opportunity and how you can make a good deal a great deal and bring people in and even get the municipality to engage in it. And when you said our percentage, I actually want to kind of go back and correct that, because I think we're like 20% municipalities, like 20% are, we work with the municipalities to take their underutilized land and redevelop it for them. And then really the 80% would probably be 40% aspiring developers and 40% business owners, because we've done a lot of projects what are called P3, so public-private partnerships, where once the municipality and or like park district, or sometimes the park districts with the city as well, where they say, hey, we have this land or we have this building, we have no use for it, right? What would you do with it? And one of the developments we did, Keller Station, which is a public-private partnership, exactly that is, the park district came to us and said, hey, the Illinois Department of Transportation, it used to be their old headquarters. They gave us this building back in 96 for $1. We have no park district need for it other than storage. And it's located on like one of the busiest streets in town. And so they asked us to go and say, what would you do with it? And we went through the building and said, well, here are three options as a park district, what we would do with it. Here are a couple options we would do with it as a developer. And we actually entered into a public-private partnership where we took that campus and we renovated it with, like you said, services. So coffee shop, restaurant, there's a libations lounge, there's retail, offices, retail offices, commercial space in general. We have some services like hair salon and, all the different, I would say all the different beauty services I have. But even during COVID is when we started construction. I thought, oh my gosh, people aren't going to return back. Well, we turned the second floor into what we call micro suites, which was kind of a play off of WeWork, but they're individual offices. So it's not some common co-working area, but they do have like a lounge space for people to meet, which is a private waiting room. But all these businesses can have their own separate offices, separate space. And a lot of people just wanted to get out of their home, right? They wanted a place where the dog wasn't jumping in the background or the kids weren't coming in. And the beauty of the campus, it backs up to an abandoned 18-hole golf course that the park district now has as a park. And there's a walking trail on there. And so we started to, really change the game in building that experience. So we accidentally created a drive-in movie theater during COVID on the campus. It got a lot of exposure, got a lot of people coming. We did, with one of our tenants, we did outdoor fitness classes during COVID, outlined everybody in different parking spots. So we got really creative with how do we meet the community where they're at. For Mother's Day, we had a drive-through pickup with flowers and jewelry and coffee and chocolates. And again, just got really creative with bringing the community in. And I think when you have that intention into your developments, it just is again, it's a win-win-win. And it's super fun to know where your community is at and have them really support you in that way.
So I'm curious on knowing where your community is at. Are there any kind of signs that you would look for as far as a community that might be more willing than not? Is there like a, like you mentioned the community with the bakery, once the bakery got going, the subsequent developments or developers were not as richly rewarded for their incentives because they had the momentum going. Is there anything that you can uh, point to, or would your checklist include? I mean, you know, dark downtown, or problem city, problem areas, or is there? Because I see that, and I've actually experienced a little bit of this. I have a property that
Yeah.
I did a development on, and it was like it changed my life to have that in my portfolio. But it was, for me, it was more of a listening thing. I heard somebody say something. I thought, wait, what? Uh,
Hmm.
and I'm just curious if I don't know that I would have known to look or ask for had I been like just knocking on doors or calling people to ask for that. It was something I heard that I was able to connect the dots and make it work. Is there anything that you see, or are there communities that the village you talk about? It sounds like they had a hunger, and I'm assuming they understand at the very basic, a city's income is tax revenue, right? If you're going to develop, if you're going to deliver services, you have to have a tax base to provide the services. Is there any kind of like looking for a declining or a city that's upside down on their budget, or any kind of thing you've seen like that would be a good, aha, or am I looking for something?
Yeah. Yeah, no, and it's great. Like you said, well, first, that point where you said that, like, I heard something, right? Is that in our course, we actually dedicate a whole module to your network, because your network is your net equals your net worth, right? Like, you got to know who to go, who to contact. And so there's 7 phases of development when you go from like initial land to even like repurposing a building. And so each, you have your base network in real estate and development and investing that you have, but then each phase really adds a separate, niche of people that can really help you go in that realm. And so there's that, but the real basic, when you talk about, is there a secret sauce? I mean, there's the typical stuff you're going to look for opportunity. Does the downtown, is it vibrant, right? Does it have a lot of vacant buildings? Are they for sale? Are they for lease? Or are they just abandoned and sitting there? Like, that's usually the one where municipalities like, oh my gosh, I wish these guys would do something with it. Well, they would, but they just don't know how. And a lot of times municipalities don't provide that teaching to really teach people how to do it. And so it's actually one of the things we're working with a consultant to do some workshops for different communities to go in and say, here, developers or spying, developers or business building owners, here's what you can do. And here's kind of like some stage you can go on and say, hey, let's step into this. But really, as you mentioned, it's exactly what you experience. It's the network. You got to put yourself in those rooms where people are having those discussions about those opportunities, right? And the first thing is, if you don't have a relationship with a city's EDC or assistant city manager or a city manager, I would start there, because they're going to tell you everything that they want in that community, where they're going to incentivize it, because they want you there, right? They want you to come and be a problem solver, make their problems go away. And when you talk about the city having the tax base, I mean, I working on this with my kids right now, is it's follow the money. Like, if you want to understand any problem, follow the money. So if you look at, if a city is tight on budget, where's their income at, right? Usually cities get more revenue from sales tax than property tax. Not always, but statistically, that's usually how we're seeing it. And so if they don't have a big sales tax base, that's going to be a gap. That's going to be something that there's going to be a pain point for them, that they're going to want to grow. And so if you can figure out a way to bring more sales tax base into their community, they're going to want to incentivize that, right? And if you can figure out a way to then create a ripple effect from that, they're going to want to incentivize that. Property tax is good, but again, follow the money. So figure out what's the split they get, and ask the question, right? Like, if I could relieve one problem that you have today that would help you create more revenue for your city and make everything else easier, what would it be? All of them are going to have an answer. All of them are going to tell you exactly. You just got to ask the question and listen. You really do. And stay curious, like, and even to the point where like, oh, I wish Bill would, sell his building downtown, but da 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 da. And it's like, okay, would you set up a meeting with Bill? Like, would you mind setting it up? And a lot of times they'll set it up the meeting for you. They'll connect you with who you need to connect with. You just have to ask the question. You just have to get in the room. And then the next part is you got to know what to do with it, right? Like, you got to know how to put together the deal and do it. But those opportunities are out there. And I think especially as we talk about, I know we're talking a lot about expanding, your portfolio, but we also want to talk about like the boomers transitioning their portfolio, right? Which also goes to how the next generation can expand their portfolio, is how do you get in and start solving a problem or becoming a solution for that next generation to have that succession plan, to have the wealth transfer, because a lot of boomers have real estate in their portfolio. They have businesses in their portfolio, and they're looking for those succession plans. They're, one of the ladies I'm working with on a workshop that we're doing is, how do you set up your succession plan when you don't even know who your successee or successor is, right? And how do you structure it for that next generation of wealth? Because if you look at, not all kids, again, when I take over the family business, not all kids are into real estate. If your kid's not, you can have them come to us. We'll get them into real estate and show them the benefit, but we'll help you out there. But that is a big need I see, and a big opportunity for people to expand their portfolio. We did I'm calling them a boomer sale, a boomer portfolio sale, where we introduced it to a group of investors we had, and they brought a couple other in, and we basically sold their portfolio where it would help the seller, reduce their capital gains tax, give them a check for so many, years, and it reduced the amount of money that our investors needed to bring to the table. So it was a win-win-win. And, a lot of these portfolios are already cash flowing really well, but the big problem is they're not set up in a way that the seller knows how to transition it without getting killed with capital gains tax. And that's something we see a lot more opportunity in, especially as a way to build their portfolio really quick with, good quality tenants and stabilized.
Yeah, that's all good insight there. I know the thing I've come to recognize is it's a lot easier to get into business than it is to get out. And I'd say the same holds true for somebody that's got a portfolio. Like you said, the tax consequence is significant, and needs to be looked at and understood before. I mean, I think it's probably one of the things that'll hold a lot of people back from selling,
Yeah.
just based on the tax consequence. And if you have some sort of a solution for that, I've seen more older, experienced real estate investors willing to help a newer, younger investor in to see them get started, because they're there's an excitement there. There's they love the deal kind of thing as well, and if they can get their needs met, makes sense, especially if they don't have a family that wants to continue in the business. I mean, that's a great idea.
Yeah. And one of the deals we did was actually with my parents. And people are like, well, why didn't you buy the portfolio? And one, I have a sister, and it was, to make a clean cut with it. And a lot of times you'll see people in that situation, right? Where, I could have easily bought it, but then one, am I ever going to have the autonomy to run that portfolio as I want it? Or is does my sibling think, oh, I need this, I need that? And a lot of times cash divides evenly, right? Where real estate doesn't necessarily divide evenly. And so there's different ways you can set up that structure and that sale for, say, hey, we're gonna gift these properties or sell these properties, so you have that tax structure benefit, and then we're gonna sell this. So then again, that cash divides evenly. And so really, it's talking through that strategy and what's right for you, what's right for your family. And we're finding a lot more of those calls we're having on a daily basis with people of how do we set this up, to succeed.
Yeah, makes sense.
Yeah.
Hey, Katie, if we could, I'd like to shift gears here for a second.
Yeah.
By day, I'm an insurance broker, and as such, I work with my clients to assess risk and determine what to do with the risk. And
Hmm.
there's three strategies we typically uh, look at. We first look to see if there's a way we can avoid the risk. And that's not an option. We look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, then we look to see if there's a way we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. It could be your clients, the interest rates, the market, the municipalities, whatever it is that you identify and consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance-related answer. And so if you're willing, I'd like to ask you, Katie Kim, what is the biggest risk?
The biggest risk is it all not working out, right? And not going to plan, pretty much. Um, so when we step into a development, I want to answer it in two parts. I want to answer an insurance side of risk, because I think insurance is a great way to do risk, and it's definitely part of our risk mitigation plan. But when we step into putting together the development structure, it's more than what are you offering your investors, right? It's who's on the team in the development, and what are they seeing as a risk, and putting all those feedbacks and comments into that risk mitigation plan for the development itself, and communicating that to our investors and our bank and all of our team. And then also contingency on the financial side for sure. But how do you make sure you have plan A, B, C, D, really EF all the way to Z for each item in the plan and the process? So, a couple of the projects we started, I mentioned Keller Station as one of our developments. We were in the middle of construction when COVID hit, so now you got to look at, okay, you want businesses to come into a place where they can't open, they can't get, going, they can't launch. And some of them are retail, some of them are, customer facing, some of them are restaurants and coffee shops. And, looking at that plan and how do you shift and pivot? And that's where I really go back to network, and who do you have in your network? How are you building your network? Because they're your biggest resource, they're your biggest cheerleaders. They're gonna really, think outside the box, bring their expertise in their lane to really help the risk mitigation. We were the success story at Keller Station was, our coffee shop there, CXT Coffee, they have grown 3x, since COVID. They pivoted. They actually did some really cool marketing during COVID. They did a curbside pickup because they didn't have a drive-through. We had a couple retail businesses. Hello Headband, who does headbands and scrub apps. They have the softest fabric. They actually moved into their first retail location from their home in March 2020. So you think like right during the COVID shutdown. And they were actually so busy online, they would sell out within like 3 minutes, sometimes 30 seconds. And they couldn't even open their store because they couldn't keep inventory in. They were just, so it's how do you leverage your team to really enhance whatever the goal is, if it's growth, if it's risk mitigation, if it's, avoiding that issue, leveraging that. And one way we do it specifically with insurance is we have our insurance agents look at our contracts, look at our policies, where are we, at risk, right? And some of the policies, when people put together investment deals, as is you want to make sure you have a policy to protect your investors, protect your officers, as well as the building. Like it goes past just that physical structure. And sitting down with someone, like yourself, where you can say, okay, hey guys, I want to show you where you're exposed, right? Here are some things, here's some ways we can cut your premium without cutting a coverage. And that is where I see a lot of people, such as yourself, coming as a strategic partner to the team versus, hey, I'm just selling this product. I'm just selling this policy, right? You're coming from contribution, with, everything you're doing with the podcast and educating your audience. You're educating them to be, again, to walk with you and then run with you. So where they come back and say, hey, how can we get our monthly payment down, but not give exposure, right? Not give into more risk. And I think if people start to ask questions, right, and come from curiosity, bring their team as truly strategic partners in their plans, then it really changed the game. And that's where I would encourage people to go, especially when they're looking at risk and risk mitigation, is you're paying these people for their service, yes, but are you leaving money on the table by not leveraging their mind and their strategy and their strategic capability in your deals and into your network? And that is where I think a lot of people do leave a lot of money on the table.
Yeah. No, it's insurance is a challenging time right now in insurance, but one of the realities is it may seem expensive, but it's a lot less expensive than not having a covered claim.
Yeah.
Knowing your risk and weighing your risk and understanding the risk definitely is worth investing some time in, because there's nothing more frustrating than think you have something only to find out there's exclusion you didn't understand or you didn't buy that coverage. So well said.
Yeah.
Hey, Katie, where can the listeners go if they'd like to learn more or connect with you?
They can go to katiekim.com, KATIEKIM.com. And that has, pretty much everything on it. Courses. They can also reach us on all the social media. Our handle is the Katie Kim. Katie Kim was taken, so I had to go the Katie Kim. But yeah, so you can find us on YouTube, LinkedIn, Facebook, Instagram. So yeah.
Cool. Well, Katie Kim, I can't say thanks enough for taking the time to talk today. I've enjoyed it, learned a lot, and look forward to doing it again soon.
I appreciate it. Likewise. Thank you.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.